Hello and welcome to Edelweiss Comtrade video. I am Renisha from Commodities Research to present my weekly views on commodities and look at the Japanese earthquake impact on commodities. Last week, investors remained worried about the situation in Japan with the yen surging to the post-war high of 76.3 against the US dollar on March 16th as risk aversion prompted Japanese investors to hold back their overseas buying on assets and keep their funds onshore. But an emergency meeting held on Friday, the G7 decided to jointly intervene appreciation of Japanese yen. US dollar played into the hands of coordinated central banks' efforts to intervene on recent yen's record high as well as proposed Libyan ceasefire agreement on Friday sent a bout of risk-oriented buying frenzy during Asia. The group of 7 nations coordinated intervention was the first seen since 2000 in an attempt to aid Japan's recovery from the recent natural disaster. While oil prices changed little from the previous week, they had volatile trading as an aftermath of Japanese earthquake and tsunami as well as violence in the Middle East and North Africa region continued to push and pull back the prices. Oil prices initially extended weakness amid worries that the damping effect on growth by natural disaster would reduce Japanese oil demand. Both WTI and Brent crude oil prices fell to 3-week low on Wednesday. Rebounds were later seen during the week as the tension in the MENA region escalated and the UN voted to impose a no-fly zone across Libya. Prices, however, retreated again on Friday after the news that the Libyan government announced a immediate ceasefire against the rebels. Natural gas prices rallied as driven by the speculation that the ongoing nuclear crisis in Japan and potential changes in nuclear strategy worldwide would increase demand for LNG. The NYMEX gas contract soared 7% to close at $4.17, the highest level since February 7th. Movement in gold prices was last Friday signaled that the metal is more sensitive towards the situation in Japan and currency outlooks than the unrest in MENA region. The G7 intervention to curb appreciation in the Japanese yen lifted euro dollar and in turn gold was sent higher. While when Libya's government announced a ceasefire, oil reversed its rally, but gold and silver slipped modestly and then rebounded sharply. Price positive movement seen in base metals last week on technical short covering amid Japan's reconstruction talks helped metals to recover. Base metals ended in green zone with lead was the top gainer in the metal complex, soaring more than 10% on the LME as the launch of lead future contracts on Shanghai exchange spurred the sentiment. Copper prices witnessed a sharp lower level buying, recovered from 8900 level, that is around rupees 410 at MCX, and managed to close near 9400 at LME with 3% gain. Other metals like nickel and zinc also traded positive with zinc posting more than 2% gain while nickel prices settled in neutral zone with negligible gain. However, on the last trading day news of China's reserve requirement hike wiped out some gains. The main events in the monetary policy during the last week were India increased its rate by 25 basis points to 6.75%. Japan expanded its asset purchase program by another 5 trillion yen in response to unfolding natural and nuclear disaster. China raised its required reserve ratio by another 50 basis points, placing the rate at 20% for the larger banks. So for most of the part, it was a story of emerging markets economy raising rates in response to higher inflation targets. For the week coming by, talking about silver, the key support is $33 and key resistances at now $36. Anything above 1440 in gold as well as $36 in silver would result into good rise in bullion prices. At the domestic front, resistance is at 21,000 for gold and rupees 54,300 for silver, breaking which we may witness the levels of 21,200 in gold and 56,000 in silver. In base metals, I expect some sideways to positive trend. Copper would be seen on buying on dips as all LME copper prices are getting good support at $8700. Nickel may also see some price movement with target a good price movement with target of rupees 1220 at MCX. I expect crude oil prices also to see good to stay steady and the next week on the mixed economic outlook and ongoing certainties in the oil market. The lower winter demand and recent tsunami effect in the Japan will also curb the oil demand for the short term. NYMEX crude oil has strong resistance at 105 and 107 and support at 98. This is all from my side. Please read to our full weekly report. Bye. Happy trading.